Hi friends, Simon here from InformedTrades.com. Today is Friday, August 22nd, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on the markets, all as part of helping traders learn. You can learn from my mistakes, learn from my successes. We can all learn together. These are live trades I'm placing. My entire trading history is posted on my blog on Informed Trades. They're also verified by myfxbook.com, a trade verification service. Also on Informed Trades, we have a huge archive of learning material. If any of the information I'm presenting to you is unfamiliar to you, you want to explore other styles, other markets, check out the learning section on Informed Trades. Share your knowledge, ask questions, and we'll all learn together. Let's get started with a look at the charts. As is customary, I like to start with a look at the chart of gold. Gold fell to 12.7, right to the bottom of the range yesterday. It fell right to 12.72, which is at the bottom of the range, as you can see on this chart here, and is rallying a bit today. So this is a great, this is a great example of, when you have a big down day, there's going to be a little, 9 times out of 10, there's going to be a little bit of a pullback. So for those who want to trade the bounce back after a big move, this is an opportunity, and it's also great to, when there's a big day and it runs right into a support or resistance level, that's an especially great time where you can count on a bit of a bounce back. So definitely a clear opportunity today. Some traders, of course, the time to enter is when this candle closes. Once that candle closes, that's where you really want to enter. Outside of an immediate, really short-term bounce back, we are still at the bottom of this range. So range traders may want to buy here with the expectation that we're going to go back up to the top of the range. That can have a really nice reward risk setup. Low risk with a potential really nice reward. You can put your stop at $12.50 or something like that, $12.60, risk $15, $20 with a potential to gain $60. So if it goes all the way back up to $13.30. So 4-to-1 reward risk, pretty nice there. Anyway, that's gold. For me, I don't think we're going to. I'm expecting this to hold here. We'll see, though. If not, there's still support at 1240, and all the way support also all the way at 1180. If it breaks 1180, I'd be concerned. If it breaks 1240, I'd be wary. I do think we're set to go higher. With that said, though, I didn't expect us to go past the lows we saw in July. So the July lows were right here. 1282. I didn't expect us to go below that. We have, in fact. So that's interesting. We'll see what happens. I still think from a long-term perspective, multi-year perspective, it's a great time to buy. Okay, so that's gold. Going on to Bitcoin. This level is now looking more and more like an established support level. However, with that said, we did run into resistance at 522, which was the previous resistance level, and this is sort of where I entered at before. I entered at it right around here. Let's see if price starts heading back down. There are some signs. Yesterday we do have, at this resistance level, we have a reversal candlestick. So even though there is support at around 450, 460, if this ends up being a resistance level that, if there's some profit taking here and new bears coming in, that could push us even further down. 362 is going to be a major level to watch on Bitcoin if we break past the lows here. If we break past 442, we might find ourselves at 362 fairly quickly. Bitcoin, what I'm personally interested in, like I mentioned before, get a pullback at 586. I think that'd be a great level to short from. Of course, I'm long at 530, right around there. And I'm holding this for the long term. It's a really small position, so if I lose it all, obviously that's not preferred, but something I can tolerate. On the flip side, I am holding out for a 10 times return because it is a small position. I do want to make sure the return is sizable and worth the time. So we'll see. I'm sort of using it. I like to call it an educated lottery ticket. Low risk with a potential high reward. And if Bitcoin becomes a dominant player, if the technology is used in payments and other forms of cost sharing online, I think its price may get used a lot. Its price may rise as a result. So that's Bitcoin. Moving on to the Forex pairs. Okay, Euro Kiwi. I have 3 trades on Euro Kiwi, Kiwi Yen, and Canada Swiss. Euro Kiwi, finally getting the move I was looking for. I've been in this trade since August 11th, August 12th, And now my patience looks like it's being rewarded, although I'm still not at break even on this trade, Euro Kiwi. It's still a long way to go. But this is exactly the kind of price action I would really like to see. So we had a bearish checkmate here, August 12th. Still, the reversal candlestick formed at August 20th, right at that level. And again, you could argue that August 21st is a pretty bearish day too. Now we have another bearish day, so that's good. We're going to find a little bit of resistance, or excuse me, a little bit of support at 57.10. We'll see how price reacts there. Hopefully, price can go through that level. Hopefully, from my perspective, at least, because I have a short trade. And then we do have a few levels to break through. 56.76. That's a former resistance level that's established. Now it'll be support. We have the 50 simple moving average here. So hopefully we can break through these levels, and if we can really break past 56.42, which is still over 100 pips away, then I think that paves the way for a faster move down to 54. And that's sort of what I'm holding out for. So that's the Euro Kiwi. So far, so good. This trade has not been de-risked. My stop is still at 59.21. I entered at 58.21. The position is a little bit in the money. I do like the price action. Kiwi yen. Now this trade is even more fun. Yesterday we closed at the orange line at 87.26. When price closes at or above the resistance level, that's my cue to move my stop to break even. So I move my stop from 85.45 to 86.30. Now this trade has been de-risked, which means if price comes all the way back down to 86.30, there we go. Okay. So if price comes all the way back down to 86.30, I will get stopped out. I won't lose any money because that's where I entered at, but I'll be out of the trade. What I'm hoping for is that price can continue moving onward. We're going to find some pretty formidable resistance at 88 basically. We're going to have this level here, right around 88, 88.10. In this area, there's going to be some interesting resistance level. If I did want to take half off, that could be a level to do it at. We'll see how price reacts. The easiest scenario for me, of course, would be if we just broke strongly above through it. I'd like to hold out till 89.65. If we can clear this level at 88 and 88.10, the next resistance level will really be at 88.80, and then smooth sailing to 89.65. At least that's sort of the way the price action is set up, in my opinion. But this trade has been de-risked. That's always a milestone that I look for. And I'm not seeing too many other opportunities, but it does free up some risk. Now I only have, if all my stops get hit, my account balance will fall 0.5% rather than 0.75%. So now I have some risk. I like to keep it at 1% or less if all my stops get hit. So I have a 0.25% extra room to put on some other trade if an opportunity I see I like. Okay, so that's Kiwi yen. So far so good on that. Canada Swiss. This pair is still a little disturbing to me, mainly because I'm seeing a bunch of signs of strength in the Canadian dollar, which would suggest Canada Swiss will go up. However, like I mentioned, we have the 50 simple and 200 exponential moving average here. So hopefully what we're seeing right now is a distribution pattern. I don't feel comfortable really calling it that. I don't think. I think that's a bit of a wishful thinking on my part. I'm tempted to close out this order, but I think maybe I'll wait a little bit. Let's zoom in. You'll be able to see a little clearer. Here's the price action. You can see price is still having difficulty getting above the 50 simple and 200 exponential moving average. So that's sort of what I'm relying on. I hope this is formidable enough resistance that eventually the bulls will have to give up. The bears will come in stronger and send price down to 81.78, which is my target profit. However, we are above my entry level here. We've closed above it numerous times. So this isn't the most encouraging sign. I thought about closing out early, like I mentioned yesterday, but I'm just going to leave it on for now. Maybe I'll reevaluate. Maybe I'll close it. Excuse me. If price closes at or above the 50 simple and 200 exponential moving average. If price can close above 83.30, let's call it, which is 20 pips away, price can rally 20 pips and close above it, then I may close out my position prematurely. Other than that, I think I'll just wait. let's see, maybe this resistance is strong enough and price will head back down. And that's about it for my trading for today. I have 3 trades on at the moment. 1 has been de-risked. 2 are still have their risk on. There's a lot of interesting things going on in the market. S&P reaches new all-time highs. Interesting price action on gold now at the bottom of its range. Also, the 30-year Treasury bond and the 30-year German bond, the divergence on those two is interesting, and I think that's something that traders can learn from in terms of what is that really telling us? What is that divergence between U.S. government bonds and European government bonds really telling us, or German government bonds, I should say. Hopefully, I'd like to do some more videos on that. I'm planning to do some videos on that. So stay tuned for that. Best of luck in your trading. Have a great weekend, and we'll see you either this weekend or early next week. Stay tuned. Take care.